Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to look at some ideas in Apple. So Apple will be reporting earnings tomorrow after the close, and a couple of things that I think are important to recognize in this chart. First off is a level that I'm looking at in the weekly. Now, if you use Fibonacci work in your analysis, or as you look to add it to your analysis, I think it's very important to consider your major swing highs and swing lows. So you don't necessarily have to get down into a 5-minute chart and run a whole lot of analysis on that to begin to incorporate or find this work to be useful, but you can start off by just looking at a major swing high back against a major swing low and begin to calculate extensions off of that. So if you're not looking at anything other than the weekly chart, and we come back and run this major swing high to our major swing low, you can see that with today's open and the gap higher, this took us directly into a 1272 extension. So it's not to say that the stock can't go higher, but you could definitely make an argument for it being extended and potentially finding a place that it could pause inside of here. Now what I'm going to do is come back in and take that idea and say, okay, we think maybe it's a little bit extended. Then you come back over into your options chain. In the options chain, we've got an expected move of right around $5. So the way that I'm looking at it is to say that I'm going to look to structure a butterfly that will use the 150 short call as the primary structure of the trade. Now, I like to try and give myself no risk in one direction when I put these on, and if Apple does make the move to this expected movement to the high side, then I will lose money on this. But if you're thinking, maybe it just moves up a little bit, or it rolls over and dies. Well, one of the strategies I like to look at here is an unbalanced butterfly. Now you'll notice that this gets to be a little tricky, because once you get above 150, you no longer have dollar-wide strikes. You jump up into these $2.50 wide, and it does change the structure of the trade a little bit. But what I would like to do is look at buying the 152 calls, structuring this to do either the 147 or the 148. I think both are fine. You can still generate a credit by utilizing the 147. You will generate a better credit if you do it at the 148. So let's just say we do the 148, 150, 152. I love this type of strategy, and if you'd like to see them with a little bit more of a visual layout, it's nice to be able to flip over and analyze the trade and look at it from the perspective of what the risk profile graph will tell you. So in something like this, and you can see that I've been kind of piecing this idea together at a couple different strikes, a couple different prices, but if you're looking at something like this, what this will do for you is that if we do move up into 150, that's where this butterfly actually maximizes your profit. Since we generate a credit on the initiation of the trade, that's the piece of it that gives us no downside risk. So if Apple rolls over, then you just collect the credit you received on the butterfly. That's where you decide that if you're more bearish, well then you want to do the 148 to pay less for the call. If maybe you're a little bit more neutral, that's where you do the 147 and take in the smaller credit. But if you are bearish on this, I like the idea of initiating that unbalanced butterfly there to take in a credit on that part of the trade, and then if you wanted to come over and look at tacking on something like a bearish butterfly down into 145, that is the point where I would do that as just your standard layout, and the idea is that you can do it to a degree that the credit on the short call side pays for your exposure to the downside, and that is one way to look at legging into these trades or staggering your position as we get into Apple earnings. So I hope you found that helpful, and on the topic of looking at these extensions and something else that I found to be very helpful in my work, Carolyn will be doing a Fibonacci class coming in this weekend. So if that's something that you're interested in, I think it will be very helpful for you. It is a foundation of what I use in my work every single day. So the strategy course is going to be on May the 6th. Then we also have an interactive part where we can take what we discuss in the course and then apply it into a live market. And that's something that I have found to be very helpful with my work. So I hope that helps, gives you some ideas to apply to Apple prior to the report tomorrow, and we'll touch base on those ideas in the next free video.